And good morning and welcome once again to Your Retirement with Insurance 365. Are you turning 65 or are you within 10 years of retirement? That's what we talk about on this show here, to get your financial planning in order, to get your house in order so that when that day comes, when you go to the boss and say, well, boss, I think the time has come for me to move into the next phase of my life, you are going to be ready. This isn't something that you prepare in a matter of days. Heck, even in a matter of weeks. This is months of planning, and the more planning that you do ahead of time, the better this is going to go here. So, Jay, Angela, welcome once again here. If you want to find out a little bit more about Insurance 365, go to insuranceagency365.com, and they're located at 711 South 13th Street here in Norfolk. Big sign right on. Basically, the building is your sign, isn't it, Jay?
Pretty much.
Yeah.
Pretty much.
If you're missing it, you're not really paying attention. Angela Cradaville here as well. Angela, good morning once again.
Good morning, Jeffrey.
Okay, so let's start with financial planning, Jay. Why don't you give me the 30-second commercial of what is financial planning?
Well, it's the ability to just sit down and look at things from a helicopter view and find out where your risk is. You know, we can talk financial planning. People can make it sound very complicated, and it requires a three-piece suit, and it requires a Harvard education. Mm-hmm. But honestly, Jeffrey, getting things in line. You know, and when I'll give you the 10-second version. Talk about your life insurance. Does it have a purpose? Do you need it? Talk about your long-term care. Does it have a purpose? Do you need it? Talk about your investments. Does it have a purpose? Do you need it? Mm-hmm. Talk about your banking situation. Same thing. Your health, your will, and your healthcare power of attorney. People can try to make it sound like it's this chapter I get in when I'm rich, and then I meet with some fancy guy. Mm-hmm. You know, it's financial planning is just the obvious, but people have tried to make it so complicated that sometimes it's frustrating. They get overwhelmed, like, oh, we're going to talk about financial planning, and I'm like, we're going to talk about your risk in these areas.
Yeah.
And is there something you should do with that risk?
And everybody's different. Everybody's at a different place in their life, whether you have 1 million or 25 million, right?
Oh, absolutely.
You have to have the conversation because it's going to make life a whole lot easier down the road. And also, make sure, if there's kids involved, make sure that they're brought in and they know exactly what's going on. There's probably nothing worse, and you've probably been through this, Jay, where, all of a sudden mom and dad are gone and you're trying to find everything. The kids have no idea what they're dealing with.
Yeah, and the kids, I always have to remind people, let's get the kids involved, but please don't tell the story first. I had a couple in this week, and I just said to them, I said, do you trust an electrician to do your dental work? That's what I said to him.
Yeah.
Because, my son, he's successful. He told me to do this. Oh, my. I didn't even talk to your son. Mm. You tried to tell your son, this is what I'm looking at. You're not telling, you're not knowledgeable. I like it when they say, would you bring my son? Like I had a lady last week, brought her son in, and we met for 3 hours. That was wonderful.
Yeah.
And the son goes, I know nothing right now. But he was successful. He says, but I know nothing about what you're showing her. Please go.
Yeah.
And that ended up a very good meeting. I don't even think they're going to purchase it, but he was very thankful. We looked at the risk. We assessed it. And at the end of the meeting, it was like, okay, that's that. Now we know.
Yeah.
But when you just try to tell your son the story, when it comes to inheritance, people, they're never going to say, hey, I think you ought to do that, Mom.
Right.
Because they're viewing it as giving something away, instead of viewing it as leveraging the risk.
Mm-hmm. Okay. So,
let's talk. Something is called inheritance.
Let's talk about, yeah. And let's talk about long-term care, too. That's another conversation that a lot of people just don't want to have.
No, not the most pleasant conversation. I'll tell you how we do it that has worked well is I ask people, Jeffrey, when I'm visiting with them, if you were to fix long-term care, if you were to just say, I don't want this risk anymore, I want to move the risk to the insurance company, what amount of dollars a year would be a normal, reasonable premium amount? And most people give me the answer between $3,000 and $5,000. Okay. So what I tell them is, okay, now that we have the number, let's just say we agree upon $3,000. Jeffrey and his wife would like to look at what $3,000. Now we have to take that 3,000 and show you the 6 or 7 different concepts. Know what that means? Probably not.
Probably
right?
not. No. As I stare blankly at him across the room.
Yeah. So when it comes to long-term care, Jeffrey, you build it. You build it. It's not like car insurance where we all come out with limits of liability, medical payments, deductibles on comp, deductibles on collision.
Well, give me an example of a concept. So we'll start there.
So a concept is, the first one that we show is the concept of having a product that if you live, there's cash value in it. Okay? Mm-hmm. If you die, there's a death benefit. And if you need assistance for nursing home, home health, assisted living, it pays that facility. So it's covering 3 areas.
Okay.
Now that might, so $3,000 to say, let's have a product that covers all 3. Because are one of those 3 things going to happen to you? Yes, absolutely. Mm-hmm. The next product you look at, you might say, okay, that one doesn't offer life insurance with it, but I still want to commit to $3,000. So they're saying, what will that buy me? Well, now you design it without the life insurance included. So now the long-term care value is much more than product number 1, correct?
Mm-hmm. Okay.
Then you can also have second to dies and first to die policies within the long-term care. Mm-hmm. So you can go down many concepts. Another concept is I want to pay $3,000 for 10 years. That's pretty popular. People say, I've got about 5 years left in retirement. I want to make my payments. And Jay, I don't want to be bothered with this bill when I'm 80 years old. I just want to pay from 63 to 73. Okay.
We can do that.
But you want the coverage forever, correct? You want it till age 100.
Well, you would hope so, yeah.
Yep. So that's a concept. So payments is a concept. Life insurance included in the long-term care is a concept. A type of product that builds cash value is a concept. Mm-hmm. And then I just want long-term care is concept. So what I do is I take the $3,000, for example, and I'll say, here's 5 doors. You pick which door makes conceptually the most sense for you. Mm-hmm. Now, I know we made that sound confusing, but it really isn't, because we put together very simple to read charts, and we show the products and features of 3,000 in concept 1, 3,000 in concept 2, 3,000 in concept 3. And then I say, does long-term care even interest you?
Yeah. Or does it make sense? And what I'm learning here is how long-term care insurance and coverage has changed a lot.
Oh, man.
A lot in the last 20 to 30 years.
You know, people can poke a little fun at insurance, and it's because we market a lot of humor, and sometimes insurance doesn't always pan out the way the consumers like it. But I will say this about insurance. If consumers complain about a feature or lack of value, mm-hmm. the insurance industry does change it. And long-term care 15 years ago never had the life insurance component in it.
Yeah.
Now it does.
And the cash value, yeah.
Yeah, because people were frustrated. They say, what if Jeffrey just pays, $3,000 in premium for 20 years and then dies?
Nothing.
So people said that enough that the industry went, you know what? They're right.
Yeah.
We want Jeffrey's family to get life insurance because he may not use it. Because 30% of people don't use long-term care. That's the statistical numbers. So 3 out of 10 people will die without ever using care.
All right.
So
that's lower than I thought it would be, to be honest with you.
Really?
Yeah.
Yeah. So 3 out of 10 people just pass away. So when you look at the numbers nationally, the industry said, we need to fix this. We need to make this better. And so they've changed that. They've also changed the IRS guidelines on tax deductions. What portion of your premium of long-term care is considered tax deductible like a traditional IRA? Mm-hmm. So, yeah, the industry is, as much as we poke fun at it and think it's kind of an antiquated old system.
Companies listen.
Companies do listen.
Yeah. Okay. So then just to kind of wrap this portion of the conversation up, for the person listening at home right now, what should they be hearing and what should they be doing at this point if they're within 10 years of retirement, if they're about to turn 65? Where do we go from here?
You call my office and you simply say, we'd like to have a brief conversation on long-term care. And that does not mean we're going to buy it. Okay. There are people, probably 3 to 4 out of 10 people, that I suggest you don't even need it. And
okay.
that's just my opinion. My opinions are worth what you paid for it.
But maybe if you already have something and a product maybe that you did buy 10 years ago,
Oh.
maybe it wouldn't be a bad idea to bring that in.
Oh, that would be a wonderful idea to bring that in and just get educated on what you have, because you don't want to keep punting. I always say you don't want to keep punting and punting and punting. Eventually, you got to
down the road.
Eventually, you gotta own up to, I need to know this, and my children need to know this, because my children also need to know. Do I need more, less? Is it right in line? Who's it with? What company? What are these premiums? There's a lot of things in long-term care. It's a very complicated product now. It was not 15 years ago.
No. All right. Well, have that conversation, folks. Give these folks a call. This is Your Retirement with Insurance 365. We do this on the third Saturday of every month at 7:30 here on News Talk WJG. Insurance 365. They are located at 711 South 13th Street in Norfolk, and their phone number 402-371-3136, online at insuranceagency365.com. While you're sitting there having your Saturday morning coffee, you can get online and start looking at some of these things that we've been talking about. And we're going to talk about wills, too. Getting the will in order. Angela, it's her turn when we come back on Your Retirement with Insurance 365. And welcome back to Your Retirement with Insurance 365, the third Saturday of every month here on News Talk WJG. We join up here at 7:30 with Jay Kenobi and Angela Cradaville here. And we talk about financial planning, and we kind of went through what financial planning actually is in the first segment of the program. If you missed that, Angela's going to have this loaded up on the Insurance 365 website here shortly, aren't you, Angela?
I am.
Yeah. So you can listen to past programs here. We're trying to upload as many as we can, but there's just a lot of great information out there. So we've started to use the term orphan a lot over the last few programs, haven't we, Jay?
Yes, we like that word.
Orphan wills, orphan policy. So let's just start with a definition of that, Angela. What's an orphan will or an orphan policy?
Right. An orphan policy would be something, or a policy that you currently have that you don't have an agent anymore for, you have no idea where your agent is. Mm-hmm. And also you don't understand how the policy works. You don't know what you bought.
Yeah, agents come and go, and there aren't, there are a lot of agents here in town like Jay who have been around and are, in the community. But then there's these agents who, they might practice for a few years and then they don't last in the industry, or you buy a policy over the phone to some guy, some guy named Jake in a cubicle, and then you don't know what happened to Jake. And then you don't know what happened to your policy. So
right.
Where do you start? Where do you look for this stuff, Angela?
Well, if you have a policy, you're listening to this radio show and you have a policy, they're like, I haven't pulled it out in a while. Mm-hmm. We always want to make sure, number one, are your beneficiaries up to date? Is it your ex-spouse?
Mm-hmm. Or do you have an ex-spouse now and maybe you didn't when you pulled out the policy?
Right. Yeah, we want to make sure beneficiaries are in order. And also, a lot of times with life insurance, is there cash value built up? Do you need to continue to pay on the policy? I know we've talked about this before.
Or will the cash value take care of paying that premium every month?
Right. So it's very important that you brush up on knowing what your policy is. Mm-hmm. Your will, have you updated it lately? Where are you at? If you're if you're in your 80s, have you looked at it? Is it where you want it to
retirement.
be? Yeah.
Past
absolutely.
retirement. If you're past retirement age, if you're past 65 and you haven't updated your will in, say, 10 years, that's probably an issue.
Right. Well, you just want to make sure everything that you want to be done is on paper, because we're never promised tomorrow.
Well, see, and guys, you know exactly what she says, because your wife is like that. She expects you to read her mind and know exactly what she wants all the time, right? And so by not updating your will, that's kind of what you're doing to your kids, right? Well, you should be reading our minds and you should know what we want and buying it. You don't know me by it. No. Get it in writing. Absolutely.
Right. Like your long-term care, if you have a policy, do you know what your coverage amount per day is? Do you understand that? Mm-hmm. Do you have a deductible? Again, do you understand what that means to you?
Well, getting back to, long-term care, do you know what it costs per month to have long-term care? I think, Jay, that you talk about sticker shock. That's probably sticker shock with a lot.
It is, and a lot of people have purchased long-term care, and they say, well, has this kept up? The answer is no. I mean, when you have Alzheimer's units at $10,000 to $12,000 a month, you probably didn't buy a policy that has a value of $10,000 to $12,000. So, then the discussion needs to happen. Okay, we have a policy for $6,000 or $8,000. Okay, now, and you want to have this discussion with the kids. Where's the money going to come from? Oh, maybe it's dad's 401k, maybe it's mom's CDs. But have the discussion, like understand and know. Or, people will say, Jay, I'm 82. Can I still buy it? Yeah, maybe now more important than ever.
Yeah.
I've had people that have said no to me 10, 15 years ago that now come in and say, it's time. And I'm like, you're right. You're 82.
All right.
It is time. So, yeah, understanding those policies, what they pay, and to where. Angela, where do they pay to?
Right. So do they pay the person, the insured, or do they pay the facility? Or do you have to have a licensed nurse come in? I mean, there's so many stipulations with policies.
And just what? Yeah.
Yeah, I have a experienced lately where a person had a claim on a 4-year-old policy. Okay, so purchased 4 years ago, and called the company and said, we're going to file the claim, and the policy's actually paying $1,000 for home health care a week, whether it's incurred or not. The money is going to the customer. So the spouse said to me, well, we're not going to use $1,000. I said, it doesn't matter. You're getting $1,000 a week. So you're getting $4,000 a month for 1 year. Even though she may, the policyholder on claim may not be spending that. Well, that put the family at ease. Like, oh, well, now we have a lot of money coming in here for the next year, and we can keep this spouse at home, and we probably have enough money now for 3 or 4 years.
Yeah.
Well, and honestly, that was my own policyholder. And we had gone over that policy in 4 years twice. But you forget all the details until it happens to you, until you're live in fire.
Yeah. You
don't know what's all around you. This person finally was like, my spouse should be on claim. And then we start really digging in more and more. And it's like, boy, this is good. Mm-hmm. So they're getting cash, Jeffrey, on a 4-year-old policy in their 60s.
Yeah, that's a good place to be.
Longevity on your 60s, when you're getting care, that person could live another 20 years.
Yeah, you could. That's a good place here. But that's a good conversation to have about, if new money is needed, where does that money come from? And, we talked about that before we got on the air here, that a lot of people think, oh, my gosh, I got to go to my bank account. But there might be other channels of revenue.
Yeah, there's when people think of purchasing long-term care, they always traditionally, Jeffrey, go to, I'll have to write a check. No, you can use your IRAs, you can use your 401ks, you can use annuities, you can use a lot of different areas to fund the purchase of your long-term care. So people, it's not, let's just use for an example, you have $1 million of 401k money between you and your spouse. Mm-hmm. And people think, well, do I have to have $1 million in the market? No, you could maybe put $900,000 in the market, or you could put it all in the market and take an income off of that and pay for your long-term care to cover the whole. So you spend a nickel to save $1.
Mm-hmm. Yeah.
But people always have in their head, no, I have to go write a check to Pacific Life or Transamerica, or no, that's not true. There's many ways to do this, and that's part of the fear of people is, I don't want another insurance premium, I don't want another bill.
Right.
Well, it's not always true.
So if you've done your due diligence over the years, you're probably in better shape than one would think, and it just takes folks like you to take a look at the whole situation. Look at it from, like you said, 30,000 feet. Let's look at the whole picture here, because you talk about 401ks. That's a great thought here. So what do you see a lot of times in the real world, Angela? People come in and they might have an orphan will, or they might have an orphan policy. Right before you guys left last week, Jay, you showed me a nice little binder that you provide people that just keeps everything and all of that in one place. Maybe that would be a good start.
That's a great start. It's funny how many times I see those binders come back. Last week I did a review with a lady about 30 miles from here, and her last call was to my office to my assistant Joe, and she said, "Joe, make sure Jay brings an extra binder for my sister."
Yeah.
But the sister's not even a customer. But that binder just wraps it together, Jeffrey. It just takes everything and says, okay, financially. And I always tell people, look, my business card should not be the only business card in here. There are great people selling mutual funds. There are great bankers. There are great people, great attorneys. If my card's the only one in there, we have problems.
Got a problem. Jay's not a very good attorney.
No, and he's a worthless banker too. So I make sure and explain. We wrap this up with you. That's part of our services because organization and knowledge. If I had to say two things that you really need, Jeffrey, as you age, it's organization. And then the knowledge to know, like Angela, that long-term care she's talking about, to know it, to know the life policy. This week again, I had a person come in, I've got life insurance, blah, blah, blah. And I looked at it and I'm like, it's term till 73.
Oh, boy. Yeah.
Well, no, I've paid on it. I've been paying on it. Well, yeah. I can. That's all.
Not very much of its term.
It's to 73.
Yeah.
And I said, does your love stop for your spouse at 73? And he said, well, I hope not. Mm-hmm. And I said, well, then you need to look at another type of concept. But he was just going to just stay in that mode because when you're in the mode, you think it's right. It's no different than you and I's behavior with anything, right. Jeffrey. If you and I eat at the same restaurant for lunch every day and pretty soon the doctor tells us, hey, we should stop eating there, we're like, well, there's nothing wrong with that place. I've been eating there for 20 years. Mm-hmm. Actually, it's causing some cardio problems.
Yeah. Now
we rebuke that because that's what we've done.
Yeah.
It's what our behavior has done.
It's worked up till now. Why change now?
Yeah. Why stop smoking? I mean, it's been fine.
But your situations change as you age, and so you get closer and closer to this. And knowledge is power. And I'll add one more aspect of this too: is communication. Make sure you are communicating with the family about this.
Yeah. Kids, I welcome kids. I want them to understand what they're doing. It's basic financial concepts. People, it's not taboo. It's not Harvard University. Mm-hmm. That's the hardest thing to get into people's heads is they think when they come in like I'm going to show them this new, crazy, exciting, dynamic.
Yeah,
it's fundamental.
Yeah, fundamentals, folks. That's what they're so good at. We are out of time once again. This is Your Retirement with Insurance 365. Again, Jay and Angela, thanks for coming by again this month. Join us again on the third Saturday of the month in the month of May. And in the meantime, look these folks up. InsuranceAgency365.com, 711 South 13th in Norfolk, or give them a call, 402-371-31